Welcome to Impact. Headlines. Eurozone recession fears continue. China exports grow for first time in 6 months. Oil extends gains on US strategic reserve purchases. The Eurozone contracted 0.1% in the June to September quarter despite a slowing downturn in business activity. The World Economic Forum is predicting the economic zone to contract again in the next quarter, suggesting that the regional bloc will fall into a recession. According to Cyrus de la Rubia, chief economist at Hamburg Commercial Bank, the service sector maintained its downward slide in November. The modest improvement of the activity index does not leave much room for optimism regarding a swift recovery in the immediate future. Impact on Sri Lanka. The Eurozone is a key market for both Sri Lankan exports and tourists. The recessionary situation can further hinder Sri Lanka's already falling export earnings and also discourage European traveller spending, negatively affecting the BOP. China saw its exports grow by 0.5% for the first time in 6 months in November, with imports falling 0.6%. Reuters notes that this suggests China is attracting buyers through discount pricing to overcome a prolonged slump in demand. It added that challenges remain, with the country's official purchasing managers index showing new export orders shrinking for a 9th month in a row. Impact on Sri Lanka. While there is no direct impact from this news, this trend is a green light towards a normalizing export market strengthened by recovering global demand, which would suggest a potential upturn in Sri Lanka's export volume and earnings potential. Oil prices rose, extending gains as the USA replenished its strategic reserves, suggesting a demand growth to normalize oil prices. Despite this, according to RBC analysts, prices will remain volatile and directionless until the market sees clear data points pertaining to the voluntary output cuts. Impact on Sri Lanka. Sri Lanka's high dependency on oil imports means changing prices significantly affects its balance of payments. While the country's foreign exchange reserves have improved in recent months, they remain dangerously low at just over 2 months of imports. And that's a wrap for this week. Subscribe to our YouTube channel to stay updated on the latest developments in Sri Lanka.